Garima Kapoor, economist and senior vice president at Elara Capital, joining in at this point. Garima, very good morning to you. How are you really seeing the impact on exporters? One day there's a 50%, then there's a 25%, then there's a 10%, then there's a 15% in the middle. There was a hope of an 18%. I mean, are you going to see all of this uncertainty actually impact the export number?
Hi, morning. I think this uncertainty is going to reign, particularly because the provisions under which the Trump administration has currently imposed 15% tariff are only applicable for 150 days, post which they have to go back for congressional approval, which looks quite unlikely. Moreover, as the Trump administration tries to understand the implications of the outcome of SCOTUS ruling, they're trying to look at different provisions under which different tariffs can still be imposed, and there are provisions like 338, etc., that can still be utilized. In the interim, when it comes to exporters, remember India was celebrating a relative gain because an 18% deal that was likely to get signed at 18% rate was supposed to be better than some of our peers. Now, after yesterday and over the ruling of weekend, what that does is that almost everybody is at the same platform rate of 15%, irrespective of where you started off with in terms of negotiation. So the relative gain and relative losses are now nearly wiped off, number one. And number two, we are still trying to grapple with the fact that whether the trade deal will get signed at 18% or 15%, or we might negotiate even better than that. So you would see some bit of an uncertainty both from the importers' standpoint of view in terms of US, as well as exporters across the world, including that of India.
Okay, Ajay Sahai also joining in. He's Director General and CEO of FEO, that's the Federation of Importers and Exporters. Mr. Sahai, we were just talking about what is your viewpoint on the latest round of tariffs. We spoke last on Saturday when we were at 10%. It's now become 15%. Are you still finding it as positive as you did on Saturday?
In fact, point is that whether it's 10% or 15%, it's the competition is even out. And probably that will be a good thing for the markets also, and is responding positively. We expect that 15% will provide certainty. And since India will be competing equally in terms of other countries, we will be able to get some more orders also. It's a good development. Let us see how the India BTS span out in times to come, because I personally feel that BTA will provide much more opportunity for Indian exporters. So in short, definitely it's a very good development.
Okay, what are the kind of conversations you're having, Mr. Sahai, with exporters? What are your exporters saying? What are the conversations they're having with clients over the last couple of days?
So in fact, this is wait and watch situation, because importers are also assessing the situation, and they are looking into the development which is happening on day-to-day basis. So as of now, it's a wait and watch. But the good thing is that since a lot of importers are looking into refunds of the taxes to flow, that will also help the Indian exporter, because they have an understanding with the US importers that since they have shared the benefit of the duties, whenever the refunds happen, they will also be getting their own share in that.
Mr. Sahai, a quick view in terms of the way, all of these companies are trying to do business with the US, because there's a constant back and forth. There's a constant change when it comes to tariffs as well. So planning in terms of capex, planning in terms of, forecasts as to what that year could look like is becoming really difficult. In that kind of a scenario, is US as a market companies are looking to ignore now?
I don't think US is a market which you can afford to ignore, but at the same time, companies are looking into another market, particularly in the sector where we have leveraged out to the US beyond a point. And that's why diversification is happening in some of the sectors like marine. We have been successful in doing the diversification. We have moved to the European Union, we have moved to China, and that's a process. But I think one has to look into that US is such a large market that any industry would not be able to ignore the market, but at the same time, people would not like to keep all eggs into the market, into one basket, and therefore this diversification trend will continue, come what may.
Okay. Garima, coming to you as well, we're talking about the way an impact could come in as an economy. But let's be specific. When you talk about the impact in terms of the Indian rupee, we've seen strength in today's session. What would that mean in terms of the currency and its impact in terms of when you talk about the fiscal deficit as well?
See, when it comes to the currency, clearly the rupee's brunt was largely being faced. One, because of two uncertainties. One, that India-US deal was not in the sight even as we signed other deals. And second, the funding of the current account was becoming challenged because of the net FDI number being remaining low and FPI's remaining continuous outflow. Now, this 15% uniform tariff for now at least clears one thing, that the executive power of the US to basically be little ad hoc and abrupt in nature against a particular country has receded, including the threat relating to, let's say, 25% penal tariff that we were facing because of Russian imports, which were also under the emergency provision. So from that point of view, the headwinds on the rupee that you could now face excessively high tariffs is behind us. So relative gain may not accrue immediately, but relative disadvantage or loss that we were being put across before we agreed to a deal is also not on the horizon. So that's why rupee probably is taking a respite. In any case, if you culminate the possibility of signing a deal with US sometime in the quarter now, along with EU coming into effect next year, and with UK likely coming into effect from April, May this year, we're looking at a completely expanded horizon for India's exports and a possibility of a shrinking of a current account deficit a year and a half from now. With FPIs looking India at a favorable market, I think rupee should actually see much more respite, and we're looking at ending the current next financial year probably at a handle below 90 sometime by March 2027.
That's an interesting take coming in there. But thank you, Garima. Thank you, Ajay Sahai, so much for joining in. It's always a pleasure to speak to both of you.